Let's begin where we always do. The market stocks are rising. They've given up some of their best levels, though. Big question now, is a bottom finally forming? That answer might lie with Apple, which staged that big comeback for the ages Monday during this show.
This could be a meaningful turning point in the stock today, right now.
Apple's now positive. It's not often, Jim, that you see Apple shares move $6 in a session.
It went up because we all felt that it was overdone. I got to tell you, Josh started it by talking about a technical situation. We all felt that it's washed out. Look, it's an inexpensive stock.
All right, so we're looking for some follow-through. Today, it's been, Josh, between positive and negative territory, but this seems to be a significant period of time for where this stock's going to go from here.
Yeah, look, I think if you're a bull, you don't need it to run up 10 points. I think just having the price stabilize after an almost 30% drop, almost in a straight line. And I think the thing with Apple serving as a bellwether for the overall market, there are people that will cite certain months where they diverged and it didn't matter. But I just think big picture for psychology, you cannot have the third largest stock in the world, maybe the most widely held, falling in a straight line and expect traction anywhere else in the market. So I still feel that way. That being said, big gap up open this morning. Now it's down 0.5%. If it breaks below yesterday's level, throw out the fundamentals, it won't matter because psychology will be negative enough to push it lower. I think you have to just be reasonable with your expectations. This is a choppy environment. There is no trend. And if you get a stock that stops going down, maybe that's the new up.
Yeah, and Pete, I mean, you need Apple for the overall market to get its footing?
Well, it sure did help the turn yesterday, right? I mean, I think when you look at Apple starting to turn, and then all of a sudden the rest of old line tech started to go. It was IBM, it was Intel, it was Cisco. You go across the board. All those names started to move to the upside. Today, by the way, first 30 minutes, they all looked great. Matter of fact, Apple looked fantastic once again. Then it started to give it up, Scott, in the first 30 minutes. It was Apple, it was Facebook, it was a couple other names that started to turn, and that's when we went from 350. We were holding on to some of the gains, but that was really sort of a telltale for what we're seeing right now, which is up 32 points after being up 350. I mean, that I think is a huge statement in and of itself.
Yeah, Mark, I want to get you involved in the conversation. It's not like you follow Apple equity every single minute, but you do have an interesting take, though, on Apple's debt, a large level of debt, and also their large amount of cash. What it all means for the market.
Sure, I think when you take a look at it, I mean, it's got about $100 billion of debt and about $230 billion of cash. So it means it's got no real debt, right? It's sort of free cash of $130 billion. And then you've got a market value of about $830 billion. You take a look at what's going on in sort of the sectors. I mean, take Uber. Uber right now, that same debt is trading at 8%, 8.5%. And it's also got, Uber's got net debt of 0. Yet Uber's going to go public at what, $100 billion? So why is Uber trading today at almost 2.5 times the yield that Apple trades at? And part of it is just the market is nervous. So when Yellen is talking about what's happening on the corporate debt side, everybody is nervous. I would be a big believer, if I took a look at Apple today, it's got to be cheap. A company that today is trading where it is seems to me to be cheap. I look at where the debt is, and then I look at where comps are trading, and where Apple's debt is trading compared to the comps of other companies is super cheap. So I'd rather be a buyer of Apple than anything else.
You think spreads widening out in general between things like Apple and Uber? Are you seeing that elsewhere in the credit markets or not yet?
I mean, no, you are, but you're seeing it a lot in sort of on the technology side. I mean, if you take a look at Tesla, right? Tesla right now, same thing. Company that's got it's got about the same thing, $5-6 billion of debt. That debt's trading in the high 80s. So again, 8%, and sort of yield to maturity is going to be higher. But more important than that, it's got sort of $70 billion of equity value. So why is something that's got all this equity value trading at a yield which is 8 or 9%? The reason is because the markets are nervous. Spreads have widened out. So that's the opportunity.